Yes, the Fed can move in December. Markets are expecting it right now with a 66% odd. About the only thing that could stop them would be if we were to have a sell-off in risk markets and we had a repeat of what happened in August. Now there's 7 weeks to go, and 7 weeks to go before August, we were nearly at the same position as we are now, and then we had the big sell-off and the Fed held. So you can't rule that out, but until or unless that happens, you have to expect the Fed to hike. No, it won't be one and done. This is the start of a long rate hike campaign. The Fed will try and make you believe that they'll pause for a while, but at the end of the day, they're always data dependent. And if the data comes in strong early in the year, they could move by March. Yes, the Fed was surprised by the market reaction in September, so much so that they were leaning towards a rate hike and they put it on the table at least until December. They have a hard time understanding where markets are going to go, and they don't want to upset them in any way. So it does matter to them and will always matter to them. Yes, market opinion matters to the Fed. The stock market has always been a policy tool for them. That was the point of QE. Drive down interest rates, drive people into the stock market, raise it, and create a wealth effect. The issue, though, is does it matter to most economists? Surveys say that a majority of them don't believe market reaction should matter. But it does to the Fed, and it does to the market. So I do think that you have to pay attention to it. Draghi is a man of his word. Since 2012 and whatever it takes, whenever he's hinted at something, he's delivered. He's hinted that there's more stimulus coming. He's going to deliver. Well, we could quibble about whether or not it's going to be more QE or a cut or a combination thereof, but more is coming, and it's coming very soon. Algorithmic and high-frequency trading has exploded in recent years in the bond market, thanks to the decision by BrokerTec, the largest interdealer bond broker, to allow them on their platform. It is now dominating the market with well over 50% of all trading coming from these entities. It matters for bids offers, it matters for liquidity, and it's going to continue to matter as we move forward from here. On balance, I think that as this immature new technology becomes more mature, we're going to continue to see more volatility sooner, less later in a couple of years after they kind of sort it out. When the Chinese stock market sold off hard and the economic data got bad in August, the Chinese officials didn't know what to do. They were employing a kitchen sink approach of trying anything, everything, including resting short sellers to try and stop the market from declining. It had the effect of spooking the rich and the elite who were trying to get their money desperately out of China during that period. So much so that by late August, the Chinese could not hold the peg on their currency, and they wound up devaluing by a couple of percent. That led them to have to sell treasury holdings to repatriate yuan in order to support their market. It was a one-off event because of the extreme market volatility. But if we see another episode like that in China, it can happen again. The fact with crude oil is we produce too much relative to demand, and inventories have been bloating. The fix is either going to be a big rise in demand, which would have to come from China, the largest producer or consumer of oil, and isn't happening, or we'd have to see production fall. Production has been very slow to fall because most of the crude oil companies and most of the frackers are high-yield borrowers, and they need cash flow to stay in business. The level of crude oil now, which is in the low to mid-40s, is enough to damage them. We don't need lower prices. We just need more time at these levels. If we were to roll into the spring, 6 months from now, April or May, and we still saw $42 to $45, I think we'd also have looked back and seen bankruptcies, and a lot of production will have been taken out of the market, and maybe then we could see a low.